Well, hello everybody and welcome back to another edition of the Forex Market Preview. And on this video, if this is the first time that you're watching it, let me say welcome to you. And if you're one of the now more than 52,000 people who have subscribed to this channel and who watch this video every single week, I want to say a special shout out to you because thousands and thousands and thousands of you tune in every week to see what I have to say, which is both humbling and a little scary to know that there's that many of you out there who are that interested in what I have to say and what I have to talk about. But what I wanted to do today was I wanted to piggyback a little bit off of what we talked about last week. Now, some of you were around last week, some of you weren't, so let me just kind of refresh you. What I wanted to do was have a little training. And originally I thought I would just reserve that for members of my syndicate group, but after talking with the rest of the team, Darren in particular, he said, "Now, we should really do something for everybody." And the idea was, hey, let's try and do something in the new year that helps everybody kind of figure out how to get off on the right foot. And we have what we decided was, rather than just do a New Year thing, let's just do something in particular that kind of gives you the process, right? That walks you through, here's why people are successful, here's why they're not successful, and here's some of the key things that you can do in your own life and in your own trading to maximize the potential that you're going to be profitable on a consistent basis. Nothing that we can possibly give you is foolproof, but I'm hoping that after we come out of this training, you're going to have a better understanding of exactly what you need to be doing. And I thought today what we would talk a little bit about was look at a couple of charts, talk a little bit about reticular activating system, and talk a little bit about being able to see what's happening and being able to understand what's happening and prepare yourself in advance, as well as a couple of other ideas that I have that I kind of want to share with you. And if you like this particular video, I would highly suggest that you head on over to Trade Empowered if you're seeing this on YouTube, and you end up signing up to join the mailing list, the email list for Forex Market Preview, and I'll give you a link to that in the subject or in the show notes area underneath this video on YouTube, so that you can kind of so you can click on it and go over and subscribe if that interests you. Because what we're going to be doing is sometime next week, I will be putting out a video sign-up form for those of you guys who want to attend that training. And it's absolutely free. It doesn't cost you anything. All you got to do is sign up and make plans to attend. I haven't decided. Everybody asks me, well, you're going to release the recordings? Likely we will to anyone who's signed up. I don't know that I will just make the recordings openly available to anyone. I just haven't decided yet. A lot of times, because this stuff is so free-flowing to me and I kind of have an idea of what I want to talk about, but sometimes we move off on tangents. Sometimes I don't always want all of that going out into the stratosphere, into the interwebs, simply because so much of what we do and is we keep to just ourselves and those people who buy our courses and things like that. And I don't, there's no reason to hide it, but I would not be able to come to you every week and do these videos and produce the quality of stuff that we produce if we didn't have courses that people spent money on. And so I am a capitalist first and foremost. I will absolutely tell you I am not running a trader charity. I am not here to try and help free of charge every trader who might wander my way. But I do want to try and help those of you the best I can with good quality information, both free and paid. So some of the stuff is free, some of it is paid. And for anybody who doesn't get that, I can't help you. But for those of you who do, you can sign up for the training, and who knows what might come out of that. There might be some really big pearls of wisdom that get shared over the course of that training that you're going to want to make sure that you're part of. So in the bottom, in the About section of this video, you're going to find a link that will take you over to the FMP sign-up page. Just make sure that you sign up, and we'll release that information sometime next week. Cross my fingers. I got so much going on. But let's flip over here, and let's take a look at just a couple of things. So the very first thing that somebody has to be able to do if they're going to be a technical trader. Now, if you're focusing on fundamentals, which is fine, you can make money as a fundamental trader. I don't know any retail guys that make money as a fundamental trader. I know some who do okay as investors, but in terms of fundamental trading, I don't know anybody who's successful who does that, and that is not to imply that it is not possible. So don't read into that something that isn't there. what I'm suggesting to you is that it is very difficult trading off of fundamentals if you are a retail trader. And the simple reason for that is the people who are very successful at that have information that you cannot possibly have access to. They have teams of people in many cases who work specific currencies or specific parts of the world, and they put together their information and they submit it to up the chain, and decisions are made based on a host of minds and calculated data, and oftentimes it has to do with special algorithms that have been written that tell them where they want to buy and sell based on the fundamental news. And so what I always tell traders is the chart is the great equalizer. You see, if people are buying, and that buying is leading to an increase in the stock price or in the currency price, you see that on the chart. You see, there's no question, none whatsoever, if I'm looking at this chart and I'm watching the market rally up here, and then we get a retracement, that if I look left, I can see that the most recent retracement level came in right here, right? No question that that occurred right there. And there's no question either that once we hit this area, that we have had a new structure high, that the market exploded, and that we hit a new, everybody sees it. There's no hiding it. Then the congestion, the triple top high, the head and shoulders, if that's what you want to call it, and then the break of structure. Once we break structure, and we were talking a lot about structure last week, once we break structure and we rally back up, where do we rally back up to? Look left, structure leaves clues. Previous structure support becomes resistance. And then the market takes a nosedive. Boom. And what do? We violate one support level and we violate a second support level. Now, if we look back, the only thing holding us together here is this big, long, wide area back here where we had our initial decline. But you see, this is only part of what's going on the chart. See, this is what anybody can see. This is what we tend to show traders when we're first working with them, is we teach them how to begin to read the market. And I try and show people this is what it means to see a new structure high and a new structure low. Higher high, higher close, lower low, lower close. Look left, structure leaves clues. If I could embed one thing, one saying that I have into your mind, and I could just drill it in there into the deepest, darkest recesses of your brain, it would be this: look left, structure leaves clues. But what happens when structure doesn't work? What happens when structure gets violated and things look like they're falling apart? Well, that's when most people start to lose their heads. Because what happened here? We had the initial retracement here where we came down, then we had a little rally, market pulled back a little bit, then we came back up and didn't really retest, and we kind of trickled around here and came back down, kind of retested this resistance level, then we rallied up, pulled back, a little structure here, but it's really ugly. Then we broke out. Boom, we're thinking trend following, right? We need to hop on that trend. Market ends up going nowhere. Then we retrace, and many people are looking at that and going and looking left and going, oh, hey, we might be back into this little resistance level, so maybe I should buy. And then as it rallies, we go nowhere. And then the market turns around and boom, we go back the other direction. We violate 1, 2 support levels. Now what are we thinking? Well, we've got to be bearish. We've got to be looking for a place to short. This is what we call, well, it's what we call a mess. But if you know what to look for, and if you've trained your eye to recognize what's happening, what you begin to see are patterns emerging. This, ladies and gentlemen, is what's called a Cypher pattern. It's a form of extensions and retracements that give us a high probability trade opportunity. Now, what do I mean by that? Well, if I draw in my Fibonacci's, let me do it for you here first. The first thing that we're going to look at is this little retracement here. Whoops, I don't know what that was. vMix stopped my recording? Okay, well, I guess we're just going to have me and the screen share the rest of the day. It's all right. So we get the initial expansion or the retracement here off of this leg. Then we get another little retracement. Then we get a break into new structure highs. And if I start drawing my Fibonacci levels in here, the first thing that I'm going to see is off this retracement, I get about a 618. Well, I happen to know that this meets the qualifications for the first stage of a Cypher pattern, but there are lots of things that meet the first stage of a retracement if we come into a 618. There are lots of different opportunities. It doesn't really mean anything to just have a 618 retracement. We need a little bit more than that. So what do? Then we begin to dig a little bit deeper. When we see the break into new structure highs, one of the things that we start looking for is our extensions. And we're going to ask ourselves the question, well, where did we terminate this particular move? If I bring in my Fibonacci extension, swing low to swing high, I'm going to see we terminated right at the 127 extension. This happens to be another condition that must be met. Now, there are other conditions inside of this that I'm not going to get into, but this is one of the conditions. 618 to the 127, we know that two qualifications are met. And the only thing that needs to happen now for this to be a valid trading opportunity is for the market to take a nosedive, as we see it does right here. And as the market takes the drop off, we look to the 127 extension for a potential buying opportunity. This, folks, is what creates the Cypher pattern. Boom. Just like that. Now, what's interesting about this is I don't have any idea what the probability is that once we hit a 618 that we'll rally to a 127. I don't know. It happens so frequently. And there's so many times that we see 618 retracements that don't hit the 127. We've never bothered to calculate it. We also don't know how many times after an initial pullback we're going to get a 618 retracement. But I do know that when I see that 618 retracement, that 127 extension rolling over into a 786 retracement, that in total, all of those things combined, I have a very high probability trading opportunity, 70 to 80% probability that the market will rally and hit targets before we're stopped out on this particular trade. Now, if I know that, if I know 70 to 80% probability or likelihood that I'm going to have a profitable trade when I see this particular setup with this particular set of ratios happen in the market, and I have a greater than a 1-to-1 risk-to-reward profile, how many times do I want to take that trade? Every single time. And twice on Sundays, just for good measure. That's because we've given and we've created for ourselves a competitive advantage. We've created that edge. You see, the edge is really nothing more than making sure that over time you're right more than you're wrong. But all of this doesn't really mean anything because the edge, the real edge, is confined within that 6-inch space between your ears. You are really the one that creates the edge because I can show you the pattern. I can teach you all of the stuff. I can teach you how to read structure, how to create a money management strategy that will destroy anything else that you've ever seen. I can teach you about the reticular activating system and training your eye to see these patterns even when there's absolutely nothing drawn for you. Your eye will just recognize them instantly. I can teach you how to do all of that stuff. I can teach you the edge, but what I can't do is give you the discipline to use it. The discipline is what separates good traders from bad traders. And that's not just the discipline to come in every day and do the same thing over and over again. It's the discipline to do the testing. It's the discipline to spend your evenings when you could be watching football or playing video games or whatever it is that you do with your time, and you're spending that crunching numbers on a spreadsheet, trying to figure out if variable A or variable B leads to higher profitability. And in the training, what I'm going to do is I'm going to begin to show you kind of how that blueprint works, how you do it, the ideas behind building a strategy, the principle behind how we do it. and then some of the things that you want to consider when you're trying to develop trading plans and putting things into action on a day-to-day basis. Maybe I'll even break out the trader mind map, and we'll talk a little bit about that. But ultimately, guys, for example, this week was a terrible week for us trading. The market was in heavy trend in many cases, and what that meant was I wasn't seeing deep enough retracements where I had an opportunity to trade. Those few instances when there were opportunities happened in the London session, which I don't trade. And so I was left with really only 1 or 2 trading opportunities in the week. Akil had several because we had lots of little consolidation areas too where we were seeing very erratic price action, which is what we look for when we're looking for patterns. But unfortunately, because of the trending nature of the market, all of his patterns ended up breaking on him. Them's the breaks. That's how it rolls sometimes. And the question becomes, do you have the discipline? Do you have the conviction of your plan to come back into the market the next day or the next week and do the exact same thing that the week prior cost you so much money? You only have that kind of discipline if you do the things that I am going to outline in the coming weeks. But I hope that this gave you some insight into training your eye to recognize the pattern, the importance of understanding what's happening below the surface and realizing that it doesn't matter whether you've got a $100 million hedge fund or whether you're one lone guy trading away in his basement. If you learn to read the chart, if you learn, I call the chart, reading the chart, the language of the market. It's like any language. At first, it's foreign to you, and you have to work at it, and things don't make sense, and sometimes you hear something and it doesn't process. It's a new word. It's a new idea. It's a new sentence structure that doesn't make any sense to you because you're new to the language. The chart's the same way. Sometimes you see things and they don't make sense to you because it's a new structure. It's a period in time that you've never experienced before. But if you learn to read the language of the market, if you learn to read structure and you learn to read charts the way I want you to, then you're going to be prepared in a way that no one else that you know is prepared. And it's not going to matter whether the guy knows what the unemployment number is in advance or not. It's not going to make any difference to you because you're going to have a trading plan that gives you a competitive advantage, that gives you the edge, and you're going to have the discipline to follow it. With that said, guys, good luck this week. Good trading. I'll see you next week.